Good morning, Crystal.
Good morning.
Good morning.
You're considered matching.
Apparently.
And we didn't plan it. It's just
No.
that green is St. Peter and green is,
There
good.
you go.
So, woo.
Okay.
That's
y'all
just how
looking
it
good?
worked out.
It did.
Plus, we
Y'all
gathering
looking
with
good?
fruits,
Let me look in your eyes.
Don't look in my eyes because people get wrong ideas.
Listen,
Crystal?
Crystal helping us with income statements.
Yes.
Again, we're wrapping up this conversation
wrapping
this
it up.
morning.
Yes, because there's still certain aspects of the income statement that I wanted people to have an appreciation for before we ran off. And two of them, one of which we will be developing later as it gets closer to tax season. Because we know persons are going to have to look at filing their personal and corporate taxes. Deadline for corporations is usually in March, and personal income taxes, most people will know, is in April. So hopefully we'll be able to have an entire discussion around that so that that empty space you see there in the income statement for taxation, you'll be able to know what number to put there. But wanted to look at depreciation, which is something many small businesses don't think about.
Depreciation.
Yes.
Okay.
But it does have an impact on your business, even if it's just for your knowledge purposes. It also impacts your taxes. But from a perspective, let's first give a definition of depreciation.
Yeah.
So
we need that.
many persons will have assets in their business. CBC has assets, most small businesses have assets, but most persons don't account for the wear and tear of those assets. So the equipment that you would have had today as compared to what you may have bought 5, 10, or 15 years ago, even if you bought it for the same exact amount, which is unlikely, they're not worth the same right now. So if you bought this couch and you bought another couch 10 years ago and they're the exact same couch and you pay the exact same money, you would not be able to sell them for the same amount because of wear and tear.
Right.
So that is what the depreciation hopes to capture. And the reason why it's still important for small businesses to keep track of this is because it helps you to be able to understand which assets you have still have some value or may need to be replaced at some point in time. So you have a stove that you've been using for your fish and chips, and you've had it for the last 20 years.
Right.
And it's not working the way it did 20 years ago. Or it takes a lot longer for things to get done. You see the flame doesn't seem to be burning as hot as it used to.
So that already hurting your efficiency.
Exactly. But because persons don't always track the assets that they have and the wear and tear that comes along with those assets, people may take it for granted that it's actually time to replace this or to look at getting some kind of upgrade or something along those lines. So having depreciation accounted for helps you to be able to keep track of your assets and what may need to be repaired, what may need to be maintained, or what may need to be replaced.
So this is an important segment, as you just mentioned, on the income statement.
Yes.
All right, so let's take a look at that income statement as we try to break it down for you. When you look at depreciation, so account for it for us, or help us to account for it.
So the thing you will have to do is to have an idea of when you would have purchased your asset. So you know that you would have purchased this couch in, say, June 2015. And what we do is we assign a useful life to most of these things. So they're broad categories. So you may have vehicles being depreciated over 5 years. You may have furniture being depreciated over 10 years. And I tell people all the time, don't worry about the math. It's very, very basic math. If you bought this couch for $2,000 and you're depreciating it over 10 years, all that means is you take the $2,000, you divide it by 10, and every year you're going to take away $200 from the value of that couch.
Wow.
That's it.
Okay.
So that $200 every year in your income statement, you're going to see it as an expense. And it's not a real expense in the sense that cash has left your business, but it's still an expense in the terms of the value that you've lost from the assets that you have.
And it could cost because it needs maintenance.
Exactly.
Okay.
So if you look at, which we'll look at the statement of financial position very soon, if you look at your statement of your financial position, the couch that you would have had as $2,000 is now worth $1,800. So you will see the value of your couch coming down every year, and then you're able to say, okay, this is getting close to not having much value. The guests that we have coming, the couch isn't comfortable, the aesthetic doesn't look pleasing when you see it on the camera. maybe we need to consider replacing it when you see it getting closer to that zero figure.
And just for the record, this couch is not there yet. This couch is beautiful.
I know this couch is very beautiful. I'm sure this has a very high value still in your fixed asset register, but it does help in terms of other assets that you may have that you haven't been keeping track of, or you may say when it gets to say halfway through its useful life, you may look at getting it reupholstered or any of those. It helps with the planning.
So that too goes into your expenses, the maintenance costs for...
The maintenance, which is a separate cost, but it would help you to be able to be aware of if you have a policy that every 3 years, not sure how often people would get an industrial couch clean, but every 2 months or 2 years, you have certain things done. So every 2 months you have a cleaning, every 2 years you might have it reupholstered, every 5 years, because of the heavy traffic, you might have it replaced. So your policy will have to be dependent on the type of business you have as well.
And where the amount of use that
Exactly.
it gets. Okay, what are some of the other considerations we need to keep top of mind so that we understand how to keep the business balancing out?
So we're going to go on to our statement of financial position. And we would have mentioned this earlier in terms of keeping track of your assets. So the statement of financial position, it used to be called a balance sheet, but they decided to change the name.
I use the right term then, anyway. Balance.
But most people are going to understand what you mean if you say balance sheet.
Yeah.
So the main thing it looks at is all of your assets, all of your liabilities, and all of the shareholders' capital or equity that you have. So the assets are the things people love to have, whether it be long-term assets or short-term assets. The furniture and equipment, the stove, all those things that we mentioned being included. Your business may have a vehicle, and you want to make sure you're keeping track of all of those things. And the assets are usually divided between long-term and short-term assets. So the short-term, we usually have in, as we would have mentioned before, cash, accounts receivable, inventory, so all of those potatoes, the chicken, the fish, your raw materials and inventory, you will keep track of in there.
Okay.
So we'll go through most of them in some more detail. As we would have mentioned with the long-term assets, you have things like, say for instance, you have a truck that you use to transport all of your inventory. You also want to make sure you're keeping track of that in terms of depreciation, wear and tear, maintenance, how much gas you will be spending. All of these things you have to think about. The equipment that you have, your stove, your cooker, everything that is related to your business and the assets that go into supporting that, you should be keeping track of here.
So don't leave out anything.
Don't leave out
All
anything.
right. Anything that's linked to the business, you need to include here.
Yes. And in terms of your current assets, the reason we separate long-term and current assets are anything that will have value within a year or less. So you keep track of those separately because they have a direct impact on the business for this financial period.
Current assets.
Current assets.
Okay.
Whereas long-term assets, like the same truck, obviously that's going to last several years. So that has value to the business for more than just 1 year cycle.
Okay. So very quickly, final takeaway.
Final takeaway, because we'll have to continue this
Yes.
into next week. Please keep track of your assets. Documentation, documentation, documentation. I
Writing.
cannot say enough.
So that's your word for this
Yeah.
Monday, documentation.
Don't keep on trucking, keep on tracking.
Thank you so much, Crystal.